Techies and scientists, welcome back to the channel. If I tell you I had a disappointed week, I will be a liar. And no, I was not disappointed to this week based on what happened last weekend. And literally after I released my video on Friday night, and then next thing you know, a couple hours later, we had the world enter into a shit show. So there's that going on over there. Um, What we had, well, so we have what's going on the other side of the world. It's not like we didn't know it was coming, but there was a lot of build up, a lot of military build up on the other side of the world. So it was expected to happen. It was just a matter of when. I knew it was going to be one of those weekends because they don't want to do it during the daytime the way they used to do it in the past. So they do it on the weekend when the market is not online. Go figure. All this stuff is planned out, just like the market, rigged and scripted. All right, let's just take a look at the market here. Even though what's happening on the other side of the world affect us, we still got to talk about it. We cannot act like we're ignoring it. This is the reason why price is going sideways. But let's talk about it this week. We only had one major thing going on, which is the unemployment. There were not a lot of big price action there, and so at 8:30 a.m. We have a nice little pop. So it popped up for a little bit and then it quickly dropped. So that's the price action we have going on Friday. I think for me throughout the most week, today was the day that had the most price action. It looks like the market was a little bit loose, and I was able to take in a couple trades here and there. Can't promise that next week will be the same, but we'll be on the watch out for that. Now let's take a look over what happened the entire week. So we have Friday here on the 27th. The market open on Sunday, gap down, trade up, and inside that gap for February 12 here. And then price trade lower, significantly lower, matter of fact, and trade down to this volume, weekly volume and balance on September 8th and September 15th, like around that conference of the time. You see why it's always good to have good notation. Kind of like take a slight touch to it in a little bit, maybe by a couple points or so, right? Actually, by a whole full point. Dip into it and quickly retrace, and then and after that, the next day again, price close here, gap down a little bit more, open and trade up higher into that premium gap here for February the 4th, and kind of nearing around a little bit, and then market close here and price gap up and trade down, and then close in that discount gap here. So it's kind of like playing around these two discount, premium and discount gap, which is why I put this one in green and red. So this is the gap for February 12th and February 4th. So a little bit of back and forth there. So now once you leave that premium gap, it starts trading lower here on Friday, and then which is why we got that nice pop at 8:30 a.m. for the unemployment news, and then it keep going lower. And what I'm anticipating next week is price maybe to gap down a little bit lower again, open up lower. How much lower, I don't know. It's kind of hard to tell. With everything that's going on, they are planning on putting troops on the ground. So anything can spook the market at this point. And if that situation get extended for a very long period of time, we may see price going sideways or keep going lower. Hopefully, the administration knows what it's doing and kind of like resolve that situation very quickly. But I don't see how. We're more likely going to see a repeat of 2003, 2004, all the way to 2009. Okay, it's probably not going to end very well on either side. So I'm anticipating for the market to gap down and then trade up all the way up to 25,000 even, maybe at close to the consequent encroachment here at 25, 23, and it'll probably just keep going sideways from there and probably start creeping into the lower crevices of 24 to 3. So what are the qualifiers that's gonna make price to behave that way? Let's take a look at next week. So next week we have CPI at 8:30 on Wednesday, and we have the usual suspect of unemployment claim, but the government is shut down, everything is delayed, so we don't know what's going on there. And then on Friday we have the jolt numbers at 10 a.m. I think at 10 a.m. on Friday you may see a little burst, but not much going on there. And I would kind of keep my eyes on Wednesday. Wednesday is probably where you will see a lot of wild price action one way. And more than likely to me, it seems like he may just trade one way down, or it's gonna trade one way up and then go back lower again. Either way, it's going back lower. All right, so let's take a look at price of gold. It seems like it's been pretty much stable around the same area there. If we take it on the monthly, after we had that nice pop on March 2nd at 5,300, it's been pretty much hovering around the same area there. It seems like he traded all the way to 5,400 around January 28th. He has not reached that high since then. Silver, it's kind of like the same thing. I'm expecting the price of silver to start ramping up and going higher because all these minerals that is stuck in the Mid East, it's not being shipped out yet. So the demand for silver, especially for AI, is going to start increase. So we're going to see a sharp increase for silver, like a sharp demand. Now let's take a look at the fear and greed index. Clearly, it's on the fear side, and that is very highly correlated to the VIX index here. The VIX index is creeping up to 29.49, and the last time we had a very high price VIX index around in the 60s was around that was last year, around April 7, April 9 area, which kind of like bring me to this topic here. I think around April 8, I would say probably around April 7 or April 22nd, this is the time where we may see price may start moving in one way or the other. It's either going to keep creeping lower and lower, starting around April 7 or April 8, or it's going to start going back higher. I mean, I don't see any news that's going to say that it's going to go higher. To me, I'm just going to say it's probably going to be the contrarian of this graph. It's just going to go start going straight down. And just because the market is going down, that doesn't mean it's all going to be just short, short, short. There will be areas and opportunity where it's just gonna go higher. It's gonna feel like it's bullish. It's gonna pump and pump and pump and pump, and then with a relatively cool high, and then start dumping. So you will see a lot of turtle soup case scenario, and I've covered turtle soup a lot in this channel. I have a lot of shorts about turtle soup, so I will make sure that you take a look at these videos and kind of give you a little bit more information about turtle soup, how to enter those trade. Let's see what we got here. So we got the price and fear index, and this here, this is one of the topic that I covered in one of my live stream early last year, and kind of like show you in the Economist this graph, and it's starting to be right on par with what's going on right now. Stock market going down because of this guy here pointing at the graph, and then you have these three stooges here. So that's Putin, that's Chi, and it's probably one of those globalists here. So kind of like picturing of kind of what's going on here. You have drones and missiles and uh, people in handcuffs, and then you have ships, containers, weapons hidden inside of it. I mean, yeah, you got a whole lot of things going on here. So this picture from The Economist is very much very relevant, and I talk in great length about that in a live stream. So let's see. So what we're anticipating next week is a CPI, and let me give you a good prognostication of what I think may happen next week. Like I said, I think price is just gonna gap down, trade higher, and if it's really well animated, maybe on Wednesday, he may reach as high as this level here on the open, which is 25,156. Wick into it a little bit, but get very close, and then start going lower. I mean, the market is going sideways. The best way to trade this market is at the extremes. Don't even look at the gaps. Don't even look at internal gaps or internal range. Just from this high here, you go short, and then from these lows here, you go long. And then if you're going long from these lows here, make sure you move your stops because at any point it's gonna dump against you. So that's the way I would play it because it's just going sideways. And I mean, there's different strategies for different market movement, right? When it's going sideways like this, you wanna play on the extremes, and when it's going on the trend, you wanna play like in the middle, like you use a gap below the 50%, mostly close to like a 70.5 percent, and then you can get in, and then you go higher. So this is not the kind of price action that we see here. So I will play the extreme, and as you can see, based on these wicks, it's a lot of extremes going on. So just because you know a strategy doesn't mean it's going to be successful, but it is most likely what will work for you. With that being said, don't overtrade, be safe, and I'll see you on the live stream next week.